Welcome to the deep dive. Today we are really zeroing in on Bitcoin.
Yes, specifically looking at what's been happening recently and, well, what some analysis suggests might be next.
Exactly. We've got this one key article. It's packed with insights, technical indicators, all that stuff traders watch.
Are those crucial price levels?
Right. So our mission here is really just to slice through that, try and give you a clearer picture of the perspectives and the source.
Sounds good. It's definitely been an interesting time for Bitcoin, hasn't it?
For sure.
May finished strong, posted a solid 11% gain, which seemed pretty positive.
Yeah, is that a good tone?
But then the conversation, it just immediately shifted, didn't it, to what's next? And the source we're digging into, it really focuses on that pivot point, looks at the price action, but also, crucially, what technical signals and levels traders are actually watching right now.
Okay, let's unpack this then, starting with that recent action. So after that strong May close, Bitcoin tried to hold on to those 2024 highs right around the start of June.
Yeah, it made a push.
But then what happened? What did the market do?
Well, the analysis points out that over the past week, we saw this sort of sustained downside pressure.
The downside pressure.
Yeah, and that move brought Bitcoin back down, back into contact with some pretty significant support levels. The source mentions it was like roughly an 8% drop from that peak attempt.
An 8% drop in a week, yeah, that definitely grabs your attention.
It does.
And heading into that most recent weekly close, wasn't there an attempt to get back up near $105,000?
Exactly, there was. And the analysis really underlines how much importance traders were putting on that weekly close level.
Right.
One trader, Matthew Hyland, he actually described it as pivotal. Just absolutely key for figuring out the immediate direction. It's like a battleground for momentum.
Okay, pivotal. So beyond just looking at the price wiggles and these closes, what specific technical signals are traders focusing on, according to this source? This is where we get into the why, right?
Right, and this is where it gets pretty interesting. The article really features the Relative Strength Index, the RSI.
The RSI. Classic indicator.
A real classic, yeah. Measures momentum, basically, how fast and how hard the price is moving. Helps you see if a trend might be running out of steam.
Right, getting tired, as they say. So what was the RSI telling them? What signal caught their eye?
Well, both Matthew Hyland and another trader, Titan of crypto, they both pointed out a potential bearish divergence that might be forming on the weekly charts.
Bearish divergence.
Okay.
Okay, hold on. For anyone maybe less familiar, can you break that down simply?
Sure. So think of it like this. The price itself might be making a new high, right, pushing upwards.
Okay.
But the RSI, that underlying momentum measure, it's making a lower high at the same time. It's kind of like the price is climbing, but the actual strength or conviction behind that climb isn't really there. It could be a sign the uptrend is weakening.
Got it. So price goes up, but the engine, the RSI, seems to be sputtering a bit. Less power behind the move.
That's a great way to put it. Now, the analysis is, careful. It says this was still unconfirmed, but worth watching.
So not a definite signal yet.
Not a done deal, no. But seeing this pattern potentially form on the weekly chart, that's pretty significant. Weekly signals often carry more weight, They could really impact that bullish outlook if they actually confirm.
Okay. So that divergence is like a yellow flag, something to watch. Are there other technical ideas in the source that point to where price might head if that momentum does weaken?
Yes, absolutely. The article also brings up fair value gaps, FVGs.
FVGs.
It's a concept traders like Titan of Crypto talk about a lot, often measured using Fibonacci levels.
Fair value gaps, what exactly are those? Sounds a bit technical.
They are a bit, but the idea is they represent these areas on the price chart where price moved super fast, like really quickly in one direction.
Okay.
And it moved so fast, it left a kind of imbalance between the buyers and sellers in that zone.
An imbalance? Like a void?
Sort of, yeah. Traders see these as potential voids or gaps that price might eventually want to revisit to sort of fill them in. They can act like magnets or maybe support or resistance zones later on.
Right, like the market left something unfinished and might need to go back.
Pretty much. And Titan of Crypto, in this analysis, specifically pointed to FVG zones of interest around $97,000 and also down at $90,000.
Wow, okay, those are specific levels. So 97K and 90K. How do these signals, the potential bearish divergence, these FVG targets, how does that connect to the bigger picture of market health discussed in the source?
Well, the analysis kind of puts together by suggesting that after a really big run-up like the 20 plus 50% run Bitcoin's had.
Which is huge.
It is huge. So seeing signals like this possible divergence or identifying these FVG areas as potential targets, it implies that maybe a cool down wouldn't be a bad thing.
A cool down? You mean like price going sideways or even dipping a bit?
Exactly. Consolidation or even a drop. From this viewpoint, it's actually seen as potentially necessary for, quote, healthy market structure.
Healthy structure.
Yeah, markets that just go straight up, parabolic without any pauses or pullbacks, they can get unstable. A cool down can kind of reset things, let indicators normalize, maybe shake out weak hands, and build a stronger foundation for the next move out.
So the technicals are hinting the market might need to, take a breather and maybe aim for those FVG zones like 97K or $90K during that breather.
That's the potential scenario suggested by those signals, yeah.
Okay. So that covers the technical patterns. What about just plain old price levels? Are there specific numbers traders are really fixated on right now, according to the source?
Oh, yeah. The big one, obviously, is the $100,000 mark. That's highlighted as a major point of interest.
Well, yeah, 6 figures. That's a huge psychological barrier, isn't it?
Massive. And trader CrypNuevo, mentioned in the article, explains it's actually more than just a round number. It's a strong psychological level, sure, but it's also a place where liquidity tends to stack up.
Liquidity, meaning lots of buy and sell orders cluster around there.
Exactly. Big clusters of orders, which makes it a potential battleground, a real point of contention.
A magnet for activity, then,
Right.
where buyers and sellers might really duke it out.
That's the idea. And CrypNuevo suggests we might see a potential retest of this level first.
A retest.
Okay.
But maybe even, dipping below it? That sounds kind of nerve-wracking.
Well, yeah, the analysis quotes him suggesting even a slight temporary drop below it to shake the market would make sense.
Ah, the old shakeout move.
Exactly. It's a classic market tactic, isn't it? Price dips just below an obvious level, like $100, triggers all the stop-loss orders from people who bought right there.
Wipes them out.
Yeah. Cleans them out, grabs that liquidity, and then maybe reverses. It's a way the market can trap people before moving the other way.
Sneaky.
Yeah.
Okay, so $100 is huge. What other specific levels did the analysis flag as important right now?
Let's see. There was the local top from back in December 2024, around $104,450.
Right.
That level actually held up as support during the recent dip, interestingly.
Okay, $104,450.
And then, of course, that $97,000 level we already talked about from the FVG analysis. That's definitely on the radar, too, as a potential target or maybe support.
Right, the FVG zone. So we've got 104,450-ish, the big $100K magnet, and then maybe 97K as levels to watch in the sort of nearer term.
Yes, those seem to be the key shorter to medium-term zones highlighted. But the source also points to a really crucial long-term level.
Okay, what's that?
The bull market support band, currently around $84,000.
$84K, wow, that's quite a bit lower than the others we just mentioned. Why is that level so important in this analysis?
So the key thing here, the point being made, is that this $84K level, which is usually based on moving averages reflecting market structure, is catching up to price.
Catching up, meaning it's rising.
Exactly. It's not static. It's a dynamic floor that's moving up over time, providing underlying support for the whole uptrend.
Okay, that makes sense. So, all right, let's try and synthesize this. We have these signals like the potential divergence, the FVG targets, suggesting maybe a cool down, maybe a dip towards 100K or 97K.
All right, some short-term caution flags.
But then we also have this rising long-term support down at 84K that's getting stronger. How does the source kind of reconcile these views? The short-term maybe bearish hints versus the long-term bullish structure.
Yeah, that's really the core tension that the analysis navigates, isn't it? Despite that recent 8% drop, despite the technical signals hinting at a potential cool down, the main perspective presented is that the overall bullish market structure, the uptrend, is intact.
Intact, even with that pullback we just saw.
That's the view presented, yeah. And the reasons given really circle back to those longer-term factors we just discussed.
Like the 84K level.
Exactly. That bull market support at 84K is consistently rising, it's catching up, and that provides a solid foundation. Plus, the analysis notes that significant liquidity, think big buy orders, is still apparently positioned above where the price is now.
Ah, so those could act as magnets pulling the price upwards?
Potentially, yes. They could draw price towards them.
Okay, so the picture being painted here is, well, it's kind of layered, isn't it? Short-term signs suggest maybe we need to consolidate, maybe dip to test key levels like $100 or 97Ks.
A bit of a pause or correction needed, perhaps?
But the broader underlying structure, the main trend, is still seen as strong and pointing upwards, supported by that rising 84K level. It's about balancing different time frames.
Exactly right. The analysis really shows how traders are trying to weigh these different signals, these different perspectives, the potential bumps in the road ahead against what they see as the underlying strength of the trend.
And for you listening in, understanding why traders are looking at things like, say, RSI divergence or these fair value gaps, or why a number like $100, that rising 84K level matters so much, well, that's super valuable, isn't it?
Absolutely.
Whether you're actually trading this stuff or just trying to make sense of the crypto news, knowing the tools and the concepts helps you understand the logic behind it all.
Yeah, it helps you see past just the headlines or the price chart itself. You start to appreciate the layers, the technical factors, the psychological stuff that's all playing a part.
It gives you the context for all the market chatter you hear, lets you grasp the different scenarios traders are actually thinking about based on this kind of data.
Exactly.
Okay, so wrapping up this deep dive then, we saw how May's nice gain quickly led to focusing on that recent 8% drop and that pivotal weekly close.
Right. Then we dug into the technicals, the potential still unconfirmed bearish RSI divergence, and those fair value gaps around 97K and 90K. Suggesting to some traders that, hey, maybe a cooldown is needed, maybe even healthy after such a big run.
Yeah, a plus 50% run needs a breather sometimes. We also looked at the key price levels they're watching, that huge psychological magnet at 100K where all the orders pile up.
The recent support near $104,450, the 97K FVG zone we mentioned, and critically, that rising long-term bull market support now around 84K.
And even with those short-term caution signs, the overall take presented in the analysis was that the bullish uptrend still intact, supported by that strengthening 84K floor and where they see liquidity sitting.
Yeah, it really gives you a fascinating window into how traders try to piece together the puzzle using this mix of technical patterns, key levels, and market psychology.
So here's a final thought for you to chew on. We've got these different signals pointing in potentially different directions, right? The unconfirmed bearish divergence, the FVG targets suggesting downside, that powerful $100K magnet effect.
But also, the strong belief that the overall uptrend is fine because of that rising 84K support.
Exactly. So considering all that, what mix of these factors do you think is most likely to actually steer Bitcoin's path from here? And what does this whole tension between the short-term signals and the longer-term view tell you about just how complex market analysis really is?
Yeah, definitely something to ponder as you watch how things unfold.